Have you ever wondered how people turn a few $100s into thousands, sometimes even millions, just by investing in cryptocurrency? What if I told you that with the right strategy, timing, and mindset, you could start building your own passive income stream from crypto, even if you're a complete beginner? In this video, I'm going to reveal practical, proven, and powerful strategies to make money with crypto in 2025. So stay with me till the end, because what you learn today could change your financial future. Cryptocurrency, in simple terms, is digital money that's built on blockchain technology, meaning it's decentralized, secure, and not controlled by any government or central bank. While Bitcoin was the first, there are now thousands of cryptocurrencies like Ethereum, Solana, and Avalanche, each offering different opportunities to make money. But before diving into strategies, you must understand that crypto investing is not a get-rich-quick scheme. It requires research, patience, and smart decisions. HODLing. The term HODL simply means holding your crypto for the long term, ignoring short-term market dips, and believing in the future growth of strong coins. Many early Bitcoin investors became millionaires by simply buying and holding through every crash, correction, and panic selling wave. To succeed with HODLing today, look for projects with real-world utility, strong development teams, and active communities like Ethereum for smart contracts or Chainlink for data integration. Store your crypto in a secure wallet, not on exchanges, and only invest money you can afford to hold for at least 3 to 5 years. Dollar cost averaging. Dollar cost averaging is a strategy where you invest a fixed amount into crypto at regular intervals, like $100 every week or every month, regardless of the market price. This method helps reduce the risk of buying at the top and smooths out volatility over time, which is especially useful in the unpredictable crypto market. With DCA, you don't need to time the market. You just need consistency and discipline. Over the years, this approach has proven to outperform lump sum investments during market peaks. Staking. Staking is like earning interest on your crypto holdings. By locking your coins into a blockchain network, you help validate transactions and get rewarded with more coins. Platforms like Ethereum 2.0, Cardano, or Polkadot offer staking rewards that can range between 5% to 20% annually. Some centralized exchanges like Binance or Coinbase also offer staking as a service, which makes it easy for beginners. It's passive income with minimal effort. Just stake and earn while your assets grow over time. Crypto trading. Crypto trading involves buying low and selling high over short time frames, daily, weekly, or even hourly. This strategy requires in-depth knowledge of chart patterns, technical indicators like RSI and MACD, and constant market analysis. For beginners, starting with demo accounts or paper trading is a smart move before risking real money. Remember, trading can be profitable, but it's also risky, emotional, and time-consuming, so never trade with funds you can't afford to lose. Investing in crypto startups. Early investing in crypto projects through initial DEX offerings, IDOs, or initial coin offerings, ICOs, can deliver massive returns, sometimes 10x, 50x, or even 100x. However, this is one of the riskiest strategies because many startups fail or turn out to be scams. To invest wisely, research the white paper, the project's use case, the founding team's experience, and community sentiment. Always verify if the project is audited and backed by reputable venture capital firms. Earning with NFTs and gaming. NFTs, or non-fungible tokens, are unique digital assets like art, music, or game items that can be bought, sold, or traded. Play-to-earn crypto games like Axie Infinity or The Sandbox allow users to earn crypto just by playing. This is a new and exciting way to earn in the crypto space, especially for creative minds and gamers. But be cautious, many NFT projects are overhyped, and not all have long-term value. So always research before investing. Yield farming and liquidity pools. Yield farming involves lending your crypto into decentralized finance DeFi platforms in exchange for interest or new tokens. By providing liquidity to DeFi protocols like Uniswap, AAVA, or PancakeSwap, you earn transaction fees and bonus tokens. But yield farming is complex and comes with risks like impermanent loss and smart contract bugs, so it's better suited for intermediate or advanced users. Safety and scams to avoid. Crypto is full of opportunity, but also full of traps. Beware of pump and dump schemes, fake coins, phishing links, and offers that sound too good to be true. Never share your private keys. Always use 2FA two-factor authentication and stick to trusted platforms and wallets. Remember, if someone guarantees profits, it's likely a scam. Building a smart strategy. To succeed in crypto, mix your strategies. You can HODL some coins, stake others, and DCA regularly while learning about new trends like gaming, DeFi, or NFTs. Set your financial goals, stay updated with news, and never invest emotionally, because smart investing is about planning, not gambling. Think long-term, diversify wisely, and always continue learning. Now that you've seen the top crypto investment strategies, which one are you going to start with? Are you a hodler, a trader, a staker, or an explorer of the NFT world? Let us know in the comments. And if you found value in this video, don't forget to like, subscribe, and hit the bell icon, because we're here to guide you on your financial journey through the world of crypto. The future of money is changing. Are you ready to be part of it?